Good morning, everyone who's joining us. We're going to give about a couple of minutes to get everyone into the webinar. Welcome and good morning. Thank you for attending. I know it's bright and early, 9 a.m. So we want to start sharp. Give us about a couple of minutes and then we'll get started. And please feel free to ask any questions throughout the webinar. We're gonna dive right into the slide presentations, but throughout the event, we will answer any questions that you guys have, okay? So we're getting people in here, so give us a couple of minutes and then we'll be right back. Good morning, everyone. So our participants are dropping from the sky, Nora.
I love it. Perfect. That's what we need. Let's get everyone educated.
And then we'll get started in a couple of minutes. We promise that this is going to be a great and exciting webinar. You're not going to want to end and leave because you're going to want to stay there till the end. So you get all the good stuff at the end. Okay, well, it's about 9:02. We want to be respectful to everybody's time. So let's get started.
Great.
Okay, perfect. Good morning, everyone. Thank you for attending. My name is Luz with New World Mortgage. I am located in the city of Downey. I've been in the mortgage industry for 21 years now, going on 22 pretty soon here. And after 22 years, I'm happy to be here. I'm passionate about home ownership, and this is why I continue to bring valuable information to my consumers and to my realtor partners. And this year, we've partnered up with Freddie Mac to continue to host these great events and continue to educate our consumers. And I'm super thankful for our speakers today, Nora and Caesar, who are joining us in this event and talk a little bit about the renovation mortgages and what's impacting our housing market. And Caesar will be sharing his stories on renovation mortgages and how he's been able to help consumers in the last 30 days get into homes with a very tough market that we're in to date. So, I want to thank my team behind the scenes who has, made this happen. They've worked long hours to make sure that we get people to attend this event through social media, through our newsletters, tagging, and so thank you, you guys, Joanne, Fernando, Enrique, Michelle, Sergio, Martha, Sasha, everyone, Gabby, especially Gabby, she's our tech and marketing person behind the scene. Thank you very, very much for doing an excellent job and helping me create this event and continue to create many more events this year. So let's get started. Once again, thank you for joining us. So just before we get started, I want to just ask a quick question. We're gonna put a poll up here. Who has attended our previous workshop? So if you guys can just take a minute and vote on if you have attended or not attended before. And this is helps us to continue to reach out to you and see, if this is your first time, welcome. If you've been here previously, thank you for coming back, and we hope to see you in the future. So it looks like we are going to be finishing the polls. And then also too, we want to know who has done renovation mortgages in the past as well. That's really important for us to know. We like to know our audience before we start talking, so that way we're not, we're baby talking to everyone, and understand that what we need to say, it's valuable, and we can continue to do the follow-up with you. Okay. So we're going to be ending our poll pretty soon here. We have, 30% has attended a workshop before, and we have about 75% new. So welcome. That's great.
Awesome.
And then who has done renovation loans in the past? No one.
Wow. Great opportunity for us then.
Welcome. I'm glad you guys are here. So you're going to get a lot of great information from us, and let's get started.
Okay, great. I'm going to be sharing my presentation with you all.
Yes.
Okay, hello everyone. Thank you for those that have been following our series of New World Mortgage AP/APM and Freddie Mac. Today we're going to talk about a really hot topic that's out there, and it's lack of inventory and a solution. We at the GSEs, feel it's kind of that quick. We need to get borrowers into homes. We know there's an existing lack of inventory issue. So with that, let me introduce myself. My name is Nora. I'm an affordable lending manager at Freddie Mac. Really, I work with a lot of clients, our sales team, our data and analytics, and I find opportunities, for us to be for us to come back and educate our primary market. It's really you guys are on the front end. So with that, let's talk a little bit about the state of the housing industry. Some great news is that I continuously talk about mortgage rates. Why? Because it's so impactful right now for the demand of first-time home buyers. A lot of these, and I'm going to mention it, my favorite topic, millennials are becoming are becoming first-time home buyers. I have some statistics on that, but they're also becoming pre-approved potential buyers. And as agents, as industry professionals, we want to know what the true demand is versus that lack of inventory. So at Freddie Mac, we've been tracking interest rates since 1971. And as you can see here, those good old days, it looks like the 80s where we had 18% interest rates, is really shows an impact on how far we have come with these low interest rates. As of May 13th, 2021, we announced 2.94 as an interest rate. We saw a quick uptick, as you can see, March on my graph, but interest rates came down rather quickly. What is the forecast? According to most economists in our housing industry, the feds have stated, relatively for the remainder of the year, interest rates are going to continue to stay low. And that is going to impact how many potential first-time millennial home buyers are going to get pre-approved. They're going to be out shopping. So as this relates to home sales, so is the market strong? Well, we are back to home sales levels not seen since 2006. So pre-2009 mortgage crisis, we were just thriving as a housing industry. So many first-time home buyers were getting pre-approved, and unfortunately the mortgage crisis hit. So of course we had a huge dip in that, as you see here on this graph, 2008, 2009, most of us lived through this. We know exactly the true impact, but we just are still in the midst of a pandemic. And interestingly enough, we had historical numbers in 2020 during this pandemic. So it was not a crisis whatsoever. We actually have an extremely thriving housing market. Now, how great is our housing market in California? Well, there is no other investment that I can, state that will give you a 12% rate of return year over year. So 2020, December 2020, the national average on housing appreciation was 11.6%, but it was 12% in California. Why? We have a large influx of millennials that live in California, and that's the largest demographic and cohort coming to the purchasing table. I'm going to mention this again, 50 million mortgage millennials coming to the housing table in the next 10 to 15 years. But I'll be very honest with you, our analysts, our economists are now looking at that number. Is it really 10 to 15 years, or did the pandemic, did these interest rates thrust this cohort, to the housing table much sooner than we had anticipated before? I think their answer lately has been absolutely. I think we're seeing them coming aggressively to the housing table more like 7 to 10 years. So your borrower of the future that's going to sit in front of you is millennial. They're also minorities. We'll talk about that in a minute. New housing construction, not nearly enough for growing demand. We need 1.6 million units built annually to just meet the rising demand. This is just meeting. This is not in excess. I think this number is also going to change. I think this is now a conservative number as of, I want to say 2-3 months, because we're seeing so many first-time home buyers getting pre-approved for a purchase. So 2008, mortgage crisis, builders stopped building. Why? Number one, these programs, there was all of a sudden, a switch in the way that we did business. So we went from stated straight to FHA, and that started showing a delay. Builders were not getting some of these inventory that was existing inventory that was built off of their book. So they started having a lot of financial issues. And a second issue that they kind of came across was it started becoming unaffordable for them to actually build a home and gain profit. So with that said, we started seeing a huge decrease. As you can see, 2009, this graph shows it just really almost came to a halt. Less than 500,000 new units were being built. Now we are seeing relatively a little bit of an increase on builders, but in all honesty, some of those units are actually luxury homes. It's very profitable for them to build luxury homes. So as a GSC, we have continuous conversations about affordability, building homes for new homes. Let's make that clear. New homes for rising demand. However, there's a couple of issues that the builders are actually encountering. One of them, there is a huge opioid crisis within the builder community. They are going to trade organizations to recruit, believe it or not, millennials to help get licensed, help build these homes. The pandemic has also kind of created an additional they call it a crisis within a crisis, lack of lumber, and the cost of lumber. So, during the pandemic, homeowners started realizing, hey, let's renovate our home. I'm renovated my home completely. I thought, hey, this is the perfect time. Interest rates are very low. I can actually do a renovation transaction and, have access to this cash and renovate my entire house. So that, all of these homeowners renovating their homes and doing upgrades caused a rise in the price of lumber. So that's extremely important, because without lumber, our builders cannot go out and build new homes. Now, inventory of unsold homes at lowest historical level. I'll tell you this, NAR is actually stating there is less than 1 month of inventory nationally. I think our number for California is actually, far less than that. We're seeing a lot of homes list and in escrow within 3 days with an offer accepted. I think, it really shows that housing market is really thriving, but it's also an issue for a lot of these millennials that are running around carrying, pre-approval letters, and they want to get into these homes. Now, a topic that I'm excited to see in the future, I may be able to bring it to you, is the competition between a first-time homebuyer millennial and baby boomers that are downsizing and have a ton of equity. We're starting to follow that trend. So stay tuned. I'd love to further that conversation in an event in the future. However, having these homes list and into escrow less than 3 days, and then they're selling on an uptick of 20% increase in California over the sales price, is really affecting affordability and these millennials having access to these homes. So the changing face of the borrower, I mentioned, let's really continue the conversation and unpack the millennial first-time home buyer. How minority is it? What are the challenges and solutions for the different demographics? I'd love to, I'm proud to say the second largest home buying demographic are millennial single females. So truly an opportunity there. The buyer of the future is going to also look like a single female. And a lot of this is attributed, for this demographic to have such an increase in 2019 and 2020 versus a single male purchasing a home is due to higher education. We have a great study on single females as the second largest purchasing demographic. And I'd love to share it with you. So Luz, I'll send it over to you so you could send it over to all of our attendees so that they can really start to see, them as a potential strong home buyer. So recent renters are seeking to become first-time home buyers. In 2020, we saw an uptick of millennials first-time home buyer purchases have an increase of 59%, which was so impactful as soon as I saw that statistic. They are starting to see the huge need to purchase a home. In some areas, it was actually cheaper and more affordable to purchase a home and have a PITI with MI payment versus a rent payment in an urban area. We'll talk about some migration patterns out of the suburban area into the exurbs because they are finding affordability out there. So as you can see here, younger millennials had an increase of 43% purchasing in 2020. So keep your eye out for those younger millennials. Youngest millennial, I believe, is 24, graduated college. This cohort is extremely educated. That's why they carry an aggressive number of student loan debt. However, they're also the demographic, age demographic that carries higher income versus other demographics of their age. So that's extremely important to know. I love this. These are Zoom towns. So if you haven't heard of Zoom towns, I might have mentioned it on one of our last presentations. Zoom towns are being formed due to an increase of companies, brick and mortars, realizing that they received true high employee satisfaction rates on all of their surveys during the pandemic. Big companies such as Google, who invested so much money into their brick and mortar buildings to have that, great experience of these employees and really have retention, have execution. And what they realize is during the pandemic, a lot of these employees were very thriving, we're thriving and actually giving more of their time to work. And these surveys actually came back so much more positive. So what they've decided is in certain key positions, a lot of employees can now work remote. Google's just an example. A lot of other companies have decided, it's cheaper to go remote. We now have seen how successful we can be as a society to work remote. And I think it's going to be very impactful in the housing industry. We're following a lot of migration patterns. Some of them I've already talked to Luz about. If you're an agent and you have a certain farm area, please get outside of that area and start becoming familiar with the exurbs, which are rural. I was talking about these migration patterns we're following right now outside of LA City, LA County, going into affordable areas such as Palm Springs, Coachella Valley. We even talked about Joshua Tree. We couldn't believe it. Weather is not a factor any longer. I don't need to be near the beach. I don't need to be, in the desert or near the mountains. That is no longer a factor. It truly is about affordability. Now, I think this slide represents the increase in rural purchases. You guys, 11.3%. It actually surpassed that suburban 9.2%. And how about 6.7% urban? In 2020, it was a huge impact on rural housing. However, rural housing has a very large age gap in how old that existing stock is. When was it built? Is it renovated? That's what we started unpacking on our data and statistics team. If first-time home buyers are going out and purchasing rural, how old are these rural homes? Because I don't think flippers are out, flipping, or investors are out flipping in rural areas. So you're going to see a big influx of that. And that's really why I'm asking agents, if you're just have a farm, realize these remote employees are going to impact where they are purchasing. So they're going to come to you as the community expert, but really you have to kind of realize a lot of these first-time home buyers that are millennials need to find affordable homes. They need to get these offers accepted. They're going rural. Now, following these migration patterns, I wanted to show you on a national level, how is this, really impacted? How has the COVID-19 pandemic impacted these migration patterns? Now, the green areas are where a lot of these first-time home buyers are migrating. Now, the yellow ones are where they are outbound. Outbound. They're leaving these areas. And of course, these yellow areas, Portland, Boston, Seattle, San Francisco, New York. And by the way, let me add Los Angeles to that. We're following Los Angeles as well, and we'll be adding it soon. We just want to get a lot more data out of that to see what the true impact is. But these are all deemed, the yellow areas are deemed unaffordable states, unaffordable areas of urban development. A lot of jobs, a lot of universities are here. But remember, a lot of these companies are going remote. So no longer do you need to live in an urban area to be able to purchase a home or stay a historical renter. Now, let's talk about some solutions. I mentioned aging housing stock. In the chat, can you guys give me an estimate as housing industry professionals, an estimate on the average age of our current housing stock in the state of California? Let's see if you do know, or I'll tell you this much, agents, you get out and you get to show these listings or these houses that are available for potential first-time home buyers. What are your thoughts? How old is our current housing stock in the state of California? I'm very curious to see. So Luz, if you can interrupt me as soon as we have a couple of answers. We're also going to talk about the wide gap between affordable housing supply and demand. I mentioned 50 million mortgage millennials coming to the housing table 7 to 10 years now because of these low interest rates, the pandemic, and growing number of households looking for more affordable home ownership. Millennials are having children at an aggressive pace, believe it or not. And they're holding, they're realizing I can't rent with my wife, my children, and these minorities also have generational households. So grandma and grandpa are also living there. Rising number of people age 55 plus choosing to downsize. Okay, for a long time, we have said these baby boomers are not selling their homes. Guess what? They are. They are at an aggressive pace right now. We're also following that trend, and I'm going to bring it to you because I'm very interested to know the numbers locally for these retirees or 55 plus that are now downsizing, realizing, hey, I need to downsize and I need to see what products are out there to be able to give me affordable housing because they are now on a restrictive income. Also, they're realizing they can get top dollar for their home. Increasing frequency and intensity of natural disasters. In certain areas, not so much in California, except for our earthquakes, are we seeing, people migrating outward where natural disasters are an occurrence. So the actual solution to lack of inventory, to having products for you to be able to make an impact on your borrowers, on your future first-time homebuyer millennials. One of them is our choice renovation. It's a conventional conforming renovation transaction with as low as 3% down. Now I'm going to throw this your way, and Luz is going to talk about it as the expert that she is. In California, we can also do ADUs with this additional financing. I can't stress this enough. This product is a fantastic solution to lack of inventory. Agents, those homes that you list or that you see listed as, potential, using the word potential in your listing, cash only, investors, Those are now, if you decide to use partner with Luz, her team, and use a renovation offer. I can't tell you, this transaction will close, and Luz will talk a little more about that, because she's going to talk about a life scenario with one of her top agents, Cesar Vasquez. And she's also going to talk about the experience. But from a product and program standpoint, if you are an agent, you're getting ahead of the curve, because as GSCs, even FHA and VA, we're now having the conversation that lack of inventory is a huge issue. We have this rising demand. The demand is only going to get higher. And this truly is a potential solution. Now, agents, I have to dispel an immediate myth. You will get paid on a renovation transaction as soon as the loan closes. So you don't have to wait for all of the renovation repairs to get done. You close the loan, you get paid, you move on to your next transaction. Now, if there's potential houses that you're listing and you're just really worried, this house needs a lot of repairs, or this house is not going to pass an FHA appraisal. It's actually not going to pass a health and safety appraisal across the board, conventional, VA, or FHA. This is your product. And I do have to say, I know Luz, I know her for many years. She's a subject matter expert on this. And, New World does such a phenomenal job, and they have all the tools and resources to thrive. Now, I'm going to throw a couple of other products your way, because they are also solutions. Green Choice Mortgages, we finance solar, anything green appliances, along with Choice Renovation. And also manufactured housing. So these retailers are building these manufactured homes, which I do have to say, I had, the luxury of being able to see one before the pandemic in Virginia. And they don't look like manufactured homes like we used to see them. This is a huge option. We're starting to see a lot more retailers come, to the housing table and say, guys, we need to start building manufactured homes at an aggressive pace, because they are affordable homes. Also, shared equity home ownership. For those of you that know, your family members that are applying for the transactions that can, have licenses as builders, or, they have that experience. Hey, you know what? I can actually put a little bit of shared equity into purchasing the home. That's also a really great option. So I love to mention, really this financing for renovation transaction is a broader range. It gives you a new book of business. This is just another niche product that you can become a subject matter expert. If you get really in partnership with Luz, you're ahead of the game, because you're going to start seeing us talk about this so much more in the future. Now, eligible properties are in the blue. I mentioned down payment as low as 3%. Yes, it can be layered with down payment assistance, and talk to Luz for the details on this. Now, I do have to mention, you are the critical link. We are your friends at Freddie Mac. We're on the secondary market, wanting to give you these products, these solutions to these large challenges. Luz and I will continue the conversation. And with that, Luz, I will stop sharing my screen and I'll turn it right on back to you.
Thank you, Nora. Thank you. That was a great information. I love the layout of the 4 renovation mortgages available, which is a hot topic, right? It's going to be a hot topic in the future. It's things that we need to know. And we're here to help you. And we have great presentations, great marketing materials, and great handbooks for your consumer. And that way they can understand a little bit more about these type of loans. But we have a lot to cover, so I want to jump right in. I want to introduce a great partner, Cesar Vasquez from Case Real Estate, who has taken a leap of faith with our renovation mortgages and actually took the punch and our advice, and he's ahead of the game. He's really taken the lead as a realtor in our industry, and finding solutions on how to get consumers into today's tough market. So I love what he's doing. I think what we're going to know from him a little bit, it's going to be a great stories in the last 30 days. We've been able to do 2 of these renovation mortgages with him. I'll let Cesar kind of, walk you through and guide you a little bit. Cesar, Thank you for joining us. I know he's trying to walk through the renovation and an example of one of the properties that we've actually financed, and then you can see it. You can see the style of the property, the way it is, and he'll tell you a little bit more about it. Caesar, can you hear us?
Yeah, can everyone hear me?
Yes, thank you. Thank you for joining us,
Awesome.
Caesar. We're
Of course,
excited to
good
have
morning,
you.
everyone. Likewise. Good morning, everyone.
He's gonna get a little dizzy with his walking.
Yeah, hopefully I'm not making too much noise, but yeah, it's a pleasure to meet everyone. A little bit about myself. I've been in the business for now 8 years. I am a real estate agent. I am also an investor myself, which gives me a lot of knowledge that I use to help my clients out. So as Luz mentioned, we are doing now these 203K FHA renovation loans, which are great because in a market where there's just such low inventory and buyers that need new homes or ways to offset their mortgage, and with the recent laws that have been passed for ADUs and junior ADUs, these are great ways to help your clients build long-term wealth and also offset their mortgage. So yeah, just kind of want to go over that. We just closed our first 203 FHA loan 3 weeks ago, and we're getting ready to close on our next one actually tomorrow. So we're funding today, recording tomorrow. It's an exciting experience.
This is kind of like what do the properties look like, right? They're really like the renovation mortgages are just an excellent tool to be able to fix something like this.
Correct. So one of the things about these loans is you're gonna need a solid team. Not every lender really knows how these loans are worked. I've spoken to different agents and different lenders, and most lenders tend to shy away from even FHA loans because it is a competitive market. However, if you have the right lender, if you know what you're doing, it is possible to get your clients' offers accepted. And it just comes down to your communication skills, negotiation skills, and having the right team. Um, so for these kind of homes specifically, the escrow does take a little bit longer. It could take you anywhere from 45 to 60 days. In the market that we're in now, what you want to do is you want to be a little competitive. You definitely want to incentivize the seller and the selling agents on why they should work with your clients. So paying top dollar for the current value, even if the house is distressed, is definitely worth it, because what we're banking off is the future value once the property is renovated. For example, one of the FHA loans we just closed was a 450 price range. The renovations will be around 140, bringing us close to 600,000. But once the property is completed, the value is going to be worth at least 740. So that's instant equity for the homeowner as soon as the project is completed. And that type of loan only takes about, the type of renovation for that house only takes about 4 months. It does seem like a long time, but seeing that difference in equity is it's definitely worth it.
Thank you, Caesar. So Caesar, can you tell us, what kind of opportunity do you feel that consumers have, and just, kind of a tip to the realtors when a client calls them and says, you know what, I read about this great renovation program because our consumers are looking online, and we're getting a lot of calls in about renovation mortgages because it's the future. What do you suggest, in this competitive market, like you mentioned, what tip do you give our agents or a consumer as to, can they find a property with lack of inventory? Is that possible in today's market?
Yes, it is possible. So one of the things I'd like to always advise agents is this business is simple. It's not easy, but it's simple. As long as you stay on top of the inventory, what's going on the market, you build relationships with agents in those areas that you're working with, because we understand that relationships are key. Those agents are able to share with you their listings prior to going on the market. On top of that, something that I was taught from the beginning was always prospect and look for opportunities. So we're constantly cold calling, door knocking, sending mailers to neighborhoods and just looking for a seller that's thinking of selling. The first property that we purchased for the FHA 203K loan came from a door knock. We door knocked the neighborhood. We left them a letter. They called us and said they wanted to sell. We ended up connecting that buyer and that selling with an off-market transaction. The second one came from being on the market, building a great relationship with the agent, explaining to them the kind of loan that we're doing. And on top of that, obviously beating out the highest loans or the highest offers. But the reason we were able to get that information, as most of you guys know, this industry, many agents won't tell you what kind of numbers or what kind of offers they have. They just say, send me your best and final, throw your dart in the dark, and pray that you get a response. But if you're able to build a good relationship immediately with that agent, you have your lender contact them, giving them a secure sense of security, knowing that this loan will get done. It is possible, but once again, it does require some sort of skill, which typically comes down to communication and rapport building. That's really key for this business.
Absolutely. Well, thank you, Caesar. We appreciate your time and showing us a property. Amazing. Guys, this is one of the big reasons why I brought Caesar into today's presentation, was that it is a reality. We are, making these things happen. And there's something really important that he said and he mentioned to me, was about really knowing your community, right? It's really understanding, knowing your community, knowing your surrounding, farming the area. I mean, we have to navigate ways. And then one really big thing that you mentioned, Caesar, it's about outbidding people's prices, right? I mean, our market's like 20, 30 offers, we're multiplying offers and highest and best price. And this is such a great tool to get you to the highest and best price to the seller using a renovation mortgage. So think about that. Think about how you can utilize that for your next buyer. How are you going to overbid and not have to worry about appraisal contingency coming in? How do you utilize this program by saying, I'm going to give you $50,000 more on your asking price and be able to finance all those funds without your client having to bring the money out of pocket? It's a big, aha moment, guys. Like, if we can't take this type of product and, look for opportunities, then we're going to continue to struggle. We're going to continue being outbid, and we're going to continue to, be short with our funds to be able to close with their transactions. So think about that a little bit, write some notes down, call us. We can definitely brainstorm with you guys and see how we can help. Caesar, thank you so much for being here and helping us. Yes.
Before we say goodbye to Caesar, I think there was a big nugget yesterday as we spoke to Caesar and we all introduced ourselves. Caesar, I mentioned to you the difference between FHA and going conventional on this product is a game changer. I know we talked about some challenges that you faced going FHA 203K. And by the way, we love our friends over at FHA. FHA was a phenomenal product, and it helped us so much during the mortgage crisis, but we're no longer in a mortgage crisis. So conventional conforming renovation as low as 3% down. But I do have to mention, FHA has MI for the life of the loan. That's number one. Upfront MIP, always on FHA. And the 203K appraisers require HUD counselors. The access to HUD counselors right now is, there is no access, to be honest with you. It's really a long process for you to be able to schedule your appraisal on conventional conforming renovations, such as choice renovation. The access to a big variety of licensed appraisers that know how to appraise renovation transactions. If you look at the Appraisal Institute, the list is extensive per county, per city, per state, per zip code. So as I mentioned this to Caesar yesterday, he says, oh my God, this is so game changing. So I kind of want to talk about, if you don't mind, Caesar, just one quick minute, tell us what you feel would be game changer as far as access to an appraiser where you don't have to wait for an FHA HUD counselor, number one, to schedule it, number two, to go out with their restrictive guidelines. What are your thoughts?
Well, that saves a lot of time. In this business, we understand that it's competitive and sellers don't want to wait. Waiting on someone else that you don't have access to as easily and waiting on their time can delay the process, right? In this business, especially right now, sellers are quick to cancel. So what you want to do is you want to have a team that's quick and effective. So when I heard that, I was excited because that saves us time of waiting for someone else that we're waiting on their time. So just knowing that it's exciting for me because we have a line of buyers that are looking for these homes, and sometimes they do pass up on these homes because they think that the house is outdated or they would need X amount of money from their own pocket. But with these products, it helps them renovate the house without any additional money from their pocket. It's an easy loan, especially if we can avoid that extra step of not having a HUD consultant. And so I want to share this as well. So for the client that we're closing on tomorrow, this does work for duplexes. So the renovation loans does work for duplexes.
Yep.
We purchased a duplex where the front unit is a 2-bedroom, 1-bathroom that we're now converting into a 3-bedroom, 2-bathroom. The back unit is a 2-bedroom, 1-bathroom. We're renovating both units completely from the interior and exterior. The buyer will be collecting about 22 or 2,300 from the back unit, cutting their mortgage in half. Like, that's insane. To live, they're going to be paying out of pocket under $2,000 once that property is complete, and they're still in the heart of Los Angeles. So, agents, I advise you to really build connections with Luz, with this team that you have here. They have great resources. It's just a matter of asking, getting familiar with them, being educated on them, and then learning how to use them.
Cesar, I have to say something. I'm highlighting you as well, because I think as an agent, not only have you grasped the product, you're promoting the product, you're successfully closing a transaction in the product. I do have to say, I think you're like 2 years ahead of the game. So congratulations, Luz. I compare this to when we went from stated during the mortgage crisis to all of a sudden full doc, FHA, give us your children, umbilical cords, blood transfusion. And we were like, oh my God, how am I ever going to close a transaction? But Cesar has embraced it, and you guys' partnership is so thriving. Cesar, just so you know, I've been hearing about the success of the renovation transaction that you guys are actually closing on, probably for 2.5 years. Luz called me and said, oh my gosh, you won't believe this. And I said, Luz, you know what? You guys are now carrying this product. I'm super excited for you. Please let me get out there and educate your agents, your partners, and let's talk to your agent once the loan closes. So congratulations, Cesar. I do have to say, you're definitely ahead of the game. I like that.
Thank you. Well, it was a pleasure being here. Thank you to all of you, and then good luck to everyone out there. Make sure you stay on top of the market and get educated as much as you can.
Congratulations.
Appreciate it.
Thank you.
Appreciate
No
it.
problem.
Well,
all right, you guys. Take care.
Thank you, guys. Well, Nora, I think we kind of tapped, on a lot of great, topics, and, most important, like, I love the renovation mortgages that Freddie Mac are bringing to us, just the fact that we don't need consultants.
Right.
That's huge. We can have access to single families, to, we can do primary investment properties, manufacture, energy efficient homes. I mean, and the list continues and continues and continues. And we, not only that, but we can go as low as 620 credit score, right? That's another thing we can do, a 97% loan to value loan as well. So your client doesn't need a lot of money to get into these homes. Everything else is finance. I mean, the stories that we're going through with Cesar and his team from Case, they're amazing. I love what he's doing. I mean, the fact that our clients only going to pay $1,000 a month to live in this amazing property in a decent neighborhood, it's unbelievable. Talk about affordable housing and talk about our challenges and breaking through those barriers. It's what we're doing. And I'm excited to share this with everyone, because we're not doing enough of it. And with the help of Freddie Mac and you and everyone and the team, we've been able to come up with solutions in this tough market. And I think, that's a plus. And I'm super thankful to our partners that we can continue to do this. So kudos to everyone at Freddie Mac for bringing these amazing renovation workshops. I can't wait to share the world with them. And I hope that our agents and our consumers, clients, if they're watching this, that they reach out to us and know that we have solutions for you guys. There's a lot of stuff that we can do now. So
Luz, I do have to highlight you for a minute though, because not all lenders embrace change in product as well as you do. I think you do such a phenomenal job of pivoting. We have access, so we know what Luz is doing. We know, just how much her company highlights her. I don't know if you guys know, but she just got highlighted and received a huge company award from her CEO. Follow her social media. We do at Freddie Mac. We're all following all these amazing social media videos. But Luz, I have a quick question for you. As a lender, being a subject matter expert in a new product that provides you with a big, broader access, for leads, for new clients, for a new book of business, what is your secret sauce? Like how do you just pivot from product to product to product? I was talking to you yesterday and you said, okay, Nora, we have to do this whole prep in 15 minutes. I got to call a client. And then you shared with me, if you don't mind, I hope you don't mind, this most amazing success story for a client that you're going to be showing on social media. And it brought both of us, like we were both just shocked about this story. Do you mind sharing it with our audience just so that they can see the impact of affordable housing and a lender like you that is really knows how to structure transactions, how to really optimize? We just heard of this other scenario, $1,000 in total mortgage payment. Is that affordable housing? If it isn't, I don't know what is, but please, if you don't mind, would you mind sharing really quickly with everyone?
Absolutely. I think, when I started in this business 20 years ago, just like everyone else in sales, we're trying to figure out like, why are we here? What's our mission? What's our goal? What do we see ourselves in this industry? And through, a lot of bumps in the road, I really figured out, and I grew this passion about home ownership, right? So I'm a strong believer that everyone has the possibility to own a home. At one point, whether it's now or later, we're all going to create real estate wealth. And I think I focused that from the beginning. And I love hearing stories, and that just keeps me going. And sometimes I'm tired. I'm thinking, you know what? It's a long day. I can't do this. And I can continue to try to break through those barriers for my homeowners. And yesterday, we had a story, and I think one of our agents is actually here in the joining us. And the story was amazing. It's about a son and a father who, just like many families, the American dream, right? What is the American dream of home ownership? And it was so great to see them to be able to accomplish to buy their home here in the city of Downey, which is, very expensive to live in. And, the dream became a reality through his son, who is a college graduate, who became an engineer in our industry and can actually afford to buy him and his dad a home. And it was so great and fulfilling to be able to see that when he was thanking us, he couldn't stop crying. He just couldn't stop crying. And it was so emotional. We couldn't get a word out of him because he just kept crying. And he's like, pinch me. Is this real? Why is the MLS still showing my property pending? When is that going to come out? Luz, like, is it real? I'm like, yes, it's your home. And it's such a great experience. And I think leaving from there, it was such a like aha moment for me to say, this is why I do what I do, because this is why we're all, we became immigrants to this country, and home ownership is such a big meaning for a lot of our clients. And I think, and I'm choking up because I love these stories. It's really a reality, and this is why I do what I do, and I really take passion and pride in my work. And like you said, it's like 11 o'clock and I'm still like scrambling presentations and doing work and trying to get to people. And that's important. I think find your passion and, be, true to what you're doing, and everything works out, even in competitive markets, It's been a tough year for a lot of people during COVID. And, I'm sometimes a little, humble to post and, things that we've accomplished as a company. And because a lot of people are not in those situations right now, but we're really grateful that we've accomplished a lot in the last year as a company and as a team. So thank you, Nora, for highlighting that. And absolutely, it's just, I think, finding ways and solutions to our consumers, and know that there's a product out there, that there's partners out there, and everything it's possible to get your buyer into a home. There's really nothing that's impossible. And those conversations just are things that come to me every single day that I do this. And I tell everyone it's possible, maybe not now, just wait, but we're going to make it happen. And we do. Sometimes it takes 2 years, but we keep going. But yeah, it's exciting. I think the future has a lot, coming. We have a lot of stuff to change. We have a lot of barriers to break through, and, affordable housing, it's there, it's possible. I tell that to my realtors and to my clients, don't give up. There's a product and there's the right home for you there. Just make sure you meet the right people. That's really important. People that are passionate and helping you work through these transactions. Absolutely. But we're going to open it up to questions. Anyone, questions on renovation mortgages, anything that we can tap on? We're going to be sharing some of the slides. and definitely, work through it. I think some of them are asking about like the benefit of conventional versus FHA. I think, FHA, it's been a product for a lot of years. And like Cesar mentioned it, and you mentioned it, we have the HUD consultants, they're hard to get through. Inspectors are very difficult to get out there in a property. We're very limited. Most appraisals in today's industry don't have the experience to do FHA loans, nor 203Ks. So it's a challenge going that route versus, conventional loans. We avoid all of that. We don't need HUD consultants. We don't need someone who is going to tell you what kind of repairs you need to do on your property or not. It's a very straightforward loan. There's a wish list that the client is able to provide to us. We get to work right away and we close them a lot faster. So there's definitely a huge advantage from going Freddie Renovation versus an FHA. So that's where we're going to be a big advocates and push forward through a lot of these renovation mortgages with Freddie Mac.
Awesome.
That's a big difference. Any other questions with our audience? Nope. Oh, let me see. Someone raised their hands. Yes, give me 1 second. Can we show the slide about the renovation program details again?
Oh, sure. Hang on one quick sec. Okay, let's see here. See if I'm able to. Are you guys able to see them? Luz?
Yes.
Okay, awesome. Yes, so eligible properties, super important. As you see here, 1 to 4 unit. I know Cesar mentioned units on FHA. Please do know. Also a big difference between an FHA appraisal and a conventional appraisal. FHA is very restrictive. Again, we love FHA even at Freddie Mac. However, it's so much easier for an appraiser, number one, to have access to the appraiser. Number two, for the appraisal to come back and it be approved on a conventional transaction. Please do know, you can also, if you have existing homeowners that are in your book of business, this product is also eligible for refinances. So if you have a ton of equity on your home, you haven't refinanced, or even if you have, you can turn around and refinance and get a renovation transaction through Luz. You can pull out the equity that you have on your home to do the entire renovation. Now, a lot of people ask when I present on this product, what's the difference between going and getting a home equity line of credit and doing this transaction? There's a big difference, actually. Home equity lines of credit cap max LTV, mostly at across the board, large banks, 80% total loan to value. So LTV, TLTV. Also, most HELOCs have variable loans, and a HELOC transaction has very restrictive guidelines. If you do a refinance through this conventional renovation product, number one, you have a low fixed rate for 30 years. I presented interest rates earlier, 2.94, May 15th, can't get any lower on borrowing on your equity. And you can go up to 97% on this product. So super important there. Those details make all the difference in the world. And if your borrower qualifies, which Luz will determine that, you can actually purchase this transaction as low as 3%.
Yeah, another question that they had was, does the loan, can we avoid PMI?
I'll let you answer that, actually.
Absolutely. So, of course, just like a traditional loan, we have to consider that, based on credit score, it's the loan to value. We could go as low as 620 with a 97%. The higher the credit, the cheaper the PMI, the higher the credit. We can also blend in the MI. One of the things just to keep in mind is that we only can go up to 97% with our conforming limits. You would need 5% with our higher balance loan amounts. And I think most of our properties in today's market are going to be falling into the high balance mortgages.
One additional, actually two, that I just thought of. Please know you can also finance up to 6 months PITI into that renovation calculation if your qualification loan to value allows you, because remember, like Cesar mentioned, you're going to need 4 months to live in the property. It's really tough trying to make a PITI payment when you're not living in the property and you're also possibly still paying rent. So you can, and that's that last bullet, finance up to 6 months PITI, not MI, but yes, PITI. That's bullet number 1. Bullet number 2, I just lost my train of thought. What was bullet number 2? Darn it. See, I was focusing on this. Oh, I know. Bullet number 2. Okay. If you're buying a builder loan, okay. Sometimes when you buy these builder brand new homes, you don't realize, hey, I'm financing and I'm purchasing for this home. There's no yard. There's no pool. There's no deck for the shade for the barbecue. You're literally buying just the home and just the land, zero landscaping. So yes, you can purchase a brand new build home on a renovation product and finance all of the landscaping, all of the upgrades. If the builder's upgrades are too expensive, you can absolutely do this transaction on that. This is such a game changer. Sometimes it's just clients and borrowers are telling us as a GSC when we send out surveys, my lender never offered that. My agent never mentioned that to me. We had no idea we could do this, or I would have went that route because the builder's upgrades are so far more expensive. So please do know it's a phenomenal product. Luz is the subject matter expert. So I want you guys calling Luz and partnering with her.
Another question that came in, we're going to answer one more. We want to be respectful for everybody's time. It's almost 10 o'clock. For refinancing, is there any fees? Yeah, so it's just it's a traditional loan. There are finance fees, of course, just like any transaction, and renovation mortgages do have a little bit of more fees than your traditional loans due to inspections and appraisals that we need. But everything can be financed, right? So everything can be financed. There's no money out of pocket for your client. If you need more details on that, just contact us and we'll be happy to share some scenarios with you. Okay. And, you know, back to the same question, you know, we can definitely blend in the PMI in some of our products. All right. Thank you, everyone, for joining us. This has been a great webinar, a lot of information. We can definitely, you know, spend another hour with a lot of scenarios. But, you know, thank you for joining us. Nora, Cesar, I know Cesar already plugged up. He had to go to another meeting. But thank you for joining us. Nora, thank you so much for all the valuable information. Thank you to our partners with Freddie Mac. And thank you, American Pacific, you know, our parent company, for allowing me to partner up with an amazing organization and bring out products to the consumers and to realtors day to day. Give us a call. You know, all our information, it's in the chat. You can also find us at Instagram at our New World Mortgage account. And, you know, follow us, and we hope to see you in our next event. Thank you.
Awesome. Thank you, everyone.